Hello, my name is Steve Bigelow with the Candlestick Forum. When we're in a sideways market, you can take advantage of the candlestick breakout patterns. Now, I'm getting a lot of questions on how do you learn candlestick analysis, and I've written 3 books, but I would suggest starting with the high profit candlestick patterns. That wasn't the first book I wrote. That was the second. The first book was published by Wiley and Sons. But this one gives you not only the meat or the high profit candlestick signals and patterns, but it also goes a little bit heavier into the whole concept of why candlestick analysis dramatically changes your overall perspective of what makes profits in the markets. So it allows us to identify what type of signals are occurring. As we can see in the Dow, we've had 6 days of dojis. Remember, doji represents indecision, and stochastics starting to roll over. That's a good indication that there's indecision up here, and now we're trading just below the T line. Get ready for a pullback, but we have the doji rule. The price will usually move, or the trend will usually move in the direction of how they open after a doji. So positive trading would tell us they are supporting at the T line and maybe doing a J-hook pattern breakout. But you also have the NASDAQ that's had a lot of trouble getting up through this resistance level, and it's trading back below the T line. Stochastics rolling over. So it just makes an investor much more alert that if things start opening lower on Monday, any long positions that have been showing weakness, you might start taking profits. But what we're looking for is what we call the top rank signals and patterns. These are candlestick patterns such as the best friend. The best friend is merely a doji followed by a gap up. But that indecision followed by that strong decision gives you an extremely high probability result that you're going to be in an uptrend. So you use that because when JP Morgan announced better earnings, we could see immediately that this best friend signal was telling us bullish sentiment was coming back into this chart. So the best friend signal is an extremely high probability result of new investor sentiment. So it acts like an alert that something new is happening, and now you can start analyzing what that chart is doing based upon activity instead of the lack of activity. The kicker signal is also one that we recommended in Morph because the kicker signal also illustrates a dramatic change of investor sentiment. Now, these are the type of signals and patterns that you definitely want to learn if you're trading in the market and you don't want to be sitting in something for a while. You want to be trading things or investing in things that have shown new, strong investor sentiment. So whenever we see kind of a best friend signal like an Amazon, there's high probability expectations that if this opens positive, your best friend signal is pushing up through this resistance level, which everybody will be watching to see what happens here at the 200, possibly taking Amazon much higher. So it's not difficult to analyze your best friend signal, when to buy, and the T-line rule when you see a sell signal and a close back below the T-line, when to take profits. We're not trying to buy at the absolute bottom. We're not trying to sell at the absolute top. We're trying to make that fat part in between with a much higher correct trade ratio. So anytime we see a strong signal, like your bearish flutter kicker signal, get ready to short this, because this is one of your strongest reversal signals, whether bullish or bearish. But a bearish flutter kicker signal probably tells us if they break this level right in here, you've got another strong downtrend. So use candlestick analysis. If you're trading another trading method, if you lay candlesticks on top of it, you're going to see much more clearly what price moves are doing. That'll be it. We'll see you in the chat rooms.